believe there's a huge need for that as real estate investors, because we might be doing closing a lot of deals, but it's amazing how some investors that I talk to that are doing 7-figure business every year, but how little they have left in their bank account at the end of the year because they have really high operating expenses. So that's where it'll come in handy. My name is Sharad. I am the owner and founder of REsimpli. I live in Toronto, Canada, right outside of Toronto, but I do my investing in Northwest Indiana. For anybody who's not familiar, this is right outside of Chicago market, practically a suburb of Chicago, but it's in Indiana, Lake County, Indiana. We do fix and flip. We do turnkey properties. I also own about 50 rental properties, and I also have a property management company where we manage about 175 units between my properties and other investors. So before we get started, I want to go over a little bit of real estate news. I haven't done this call in 4 weeks, so I just kind of want to go over some interesting real estate news specifically for investors. So from Q2 of this year to Q3 of this year, number of flipped homes has gone down from 8.2% of all the houses sold to 7.5%. So what's considered a flipped home is any home that's purchased and sold within a 12-month period is considered a flipped home. So the share of all the houses that are selling in the market, the number of flipped houses out of all the houses selling in the market has gone down from 8.2% to 7.5%. So that's a pretty significant drop. The interesting thing also is the gross profit has gone down by 18.4% from Q2 to Q3, but that's a pretty huge drop. So the gross profit right now on an average flip house is $62,000. So what's considered gross profit for this purpose is, let's say if I buy a house for $100,000 and I sell it for $150,000. So my gross profit is 50. It does not factor in any closing costs. It does not factor in any rehab that you have to do or other expenses that you have. So it's basically difference between what you buy the house for and what you sell the house for. It's at $62,000 at the end of for the period of Q3, and it's gone down significantly from Q2 to Q3. It's dropped about over 18%, so it's at about $62,000. So very, when you just look at what you pay for a house versus what you sell, it's only $62,000. So in that $62,000, you have your rehab if you have to do, you have your closing costs, you have your other lender costs that you have to pay, and any other expenses that you have, and including your bonus, including your profit, I should say. So very interesting. And then of course, the biggest factor in that is the housing market being slowed down because of the higher interest rate. You're starting to notice a little bit of softening of housing market. So something to keep in mind, as you guys are buying more houses. And then in terms of the market with the highest activity for flipped houses, the top 4 are Phoenix, Arizona, Spartanburg, South Carolina, Atlanta, Georgia, and Winston-Salem, North Carolina. These are the 4 markets with the highest activity, but the 4 markets with the highest return in terms of the difference between what you pay for the house and what you sell the house for is Buffalo, New York, Pittsburgh, Pennsylvania, Scranton, Pennsylvania, and Salisbury, Maryland. So all 4 markets on the East Coast, Northeast market that are giving the highest return in terms of what you pay for the house when you buy versus what you sell for the house. And then the highest activity is Phoenix, South Carolina, Georgia, and North Carolina. So that's kind of what's going on. Any questions, any thoughts, or any thing that you guys are noticing in your market, kind of based, similar trends, based on what I shared? I'd love to hear, if you guys have any thoughts on that. Have you guys, any of you guys noticed any slowdown from Q2 to Q3? For us, what we noticed, definitely a slowdown in our PPC, the quality of leads from our PPC, and then also pay per lead. definitely the quality of leads significantly was, bad, worse compared to what we were getting in Q2. So in fact, we stopped our paper lead for now until the end of the year. So we're going to pick it up again. And I talked to a few other investors. They noticed the same thing, that number of leads that they were getting from PPC and paper lead that were listed on the market went up, like in some cases, there was like even 40-50% of the leads coming in were already listed on MLS. So these were, homeowners getting a little bit desperate where their houses are not selling. They're starting to lose a bit of faith in their agent and contacting cash buyers. So because of that, we actually stopped Need to Sell My House Fast and a couple of other pay-per lead marketing services, and we're going to pick it up again next year. So curious if you guys are noticing anything. Dan said he's noticed much harder to sell houses. Yeah, that's definitely been the case for us, except for houses in our market, Northwest Indiana, houses that are in that $150,000 to $200,000 price point. We're still noticing a strong demand from homeowners. Again, in our market, specific to our market, we have multiple exits in that price point. So Dan, what market are you in, if you don't mind sharing? Atlanta. Yeah. So your market has one of the highest activity in terms of flip houses, but it didn't show up in kind of based on the research, not in the highest ROI. All four markets with the highest ROIs in Northeast. So it's interesting. I talked to another investor, I think it was last week, based in Atlanta market. They said the same thing, that in their market, anything over 350 to 400, at least the part of Atlanta they were in, the houses are much harder to sell versus like if you're in 200 to 300, 350 price point, that's a little bit easier to sell. Those entry level, first time home buyer houses. So that's what we're noticing, that for our market, it's 150 to 200 price point, that's still easier to sell. But it's going to be different in different markets. So that's what I would, oh wow, interesting. So 170, 200, is it 275 that you're asking? Is that what you started out with? Or is that kind of where you're at right now? Wow. Yeah, it's, I mean, of course, the interest rate has a huge say in, what people can afford. I mean, even though I feel like to some extent in some market prices have come down, but I think it's just the shock of home buyers, I feel like, just not coming to the terms with the fact that the interest rate are just higher now than they were a year ago. People are just still having a bit harder time adjusting with that. But some of the things we're doing in our market is we're giving a bigger credit to homeowners who are interested in buying a house, to help them buy their interest rate to a more affordable monthly payment for them. And that's helping with some of the houses that we have. But in our market, anything over 200, it's basically default is a pass. And then unless it's a very, very good deal for us. So thank you for sharing that, Dan. Anybody else, anything interesting that you guys are noticing to buy 3.5 now buys? Yeah, Dan shared in the chat that with a $1,700 mortgage payment, with the interest rate being 3.5%, you could buy a house for $390,000. But now the same, budget that you have to buy a house of $1,700 only buys you $240,000 house. So that's a pretty significant, affordability hit that you have. And that's kind of what happens, when people are buying houses, they're not, how much they can afford to pay for a house is based on what they can, what their monthly payment would be. And as the interest rate goes up, that definitely has a huge impact. I mean, what people can afford to pay for a house on a monthly basis, that hasn't changed. That's still the same number, unless their income has significantly gone up, which hasn't been the case. But for the most people, it's the same number that they had a year ago on a monthly basis that they could afford to pay for a house. But because of the interest rate, now they can afford a lot smaller house, or a lot less expensive house that they can afford. I had a call with my property manager. I was just asking her, with the change in increase in interest rate, now there's a little bit of slowdown in the market. If you have noticed any increase in activity with the tenants that we have, she said we're definitely getting a lot more people interested in rental properties. But she mentioned one thing. She said the quality of applications that we're getting is pretty bad. I mean, these are people with evictions, people with bankruptcy, people with, other judgments on their record that are, definitely more people applying, but the quality of applicants hasn't been super good. So that was interesting to find out. I would have imagined that the quality of tenants would also go up, as some people are getting priced out of the market and they're looking to rent a property for a year or two until the interest rate comes down. But you said the number of applicants have gone up, but the quality of applicants hasn't necessarily gone up either. Cool. Anybody else has any feedback on kind of what they're noticing in their market? Anything good, bad, interesting that they've noticed going on with their market? Thank you, Dan, for sharing that. Appreciate it. All right. In today's call, I wanted to talk about Profit First. Who here has read the book Profit First or is somewhat familiar with Profit First accounting? If you can put it in the chat or raise your hand, people that have their camera on. I'm curious, if you guys have any understanding of Profit First, have read the book or no idea kind of where you guys stand with that. Cool. Awesome. Cool. You've read the book, or are you guys implementing that in your business right now? Cool. Thanks. Okay. Awesome. Right. And then cool. Yeah, looks like we have a few guys here that are implementing in their business. So I've read the book. I'm trying to implement it now. Even though I used to be an accountant until 2011, I was a CPA. I was working for one of the largest accounting firms in the world. But full honesty, I haven't been the best with managing kind of cash flow in my business. I've been fortunate that I have a very active business. I have awesome people working for me, so I haven't had a huge need for it. But as the business is growing, and then the fact that I live in Canada and have to pay taxes in the US and Canada, it makes it a bit complicated. So I had a call with my accountant last week, and based on that, kind of started to implement some things in my business. So I went back, reread the book or listened to the book, kind of wrote down some notes that I wanted to share with you guys. By no means, I am an expert this, but I'm just sharing kind of, common sense principle based on Profit First. And I also read the book Simple Numbers by Greg Crabtree. I believe it's the same idea. Basically, when you, it's the same idea as Profit First, but they just call it Simple Numbers. And, the one is called Profit First. So with, what I'm sharing, if, people who are implementing in their business, I would love to kind of hear how you guys are implementing in your business. If there's anything I can take away that you guys have noticed worked really well in your business, and I'll share kind of how I am implementing in my business. So let me share my screen and then we can get started. Cool. All right. So the whole idea with Profit First is, especially I believe it's super, super important for us as real estate investors. We have especially, when you're wholesaling or when you're flipping houses, it's a very cash intensive business. And the biggest challenge that I notice in my business and the other investors that I talk to is how to manage the cash flow that you have in the business. And that's where I believe the Profit First model, all Simple Numbers model, is super, super helpful. So the way it works is, in a typical business, when you're doing your books or when you're managing your finances, basically what you do is you take your sales, whatever your revenue is. So in this case, revenue would be, let's say you buy a house for 100,000, you put, 25,000 in rehab and you sell it for 160. So your gross profit, your profit would be $35,000, assuming there's no other expenses. And what we as investors do is, let's say we have 10 of these transactions. So we make about $350,000 in profit, not in profit, in revenue. In this case, let's just say sales. And then we would pay all our operating expenses. So we would pay for marketing, we would pay for our employees, we would pay for any, supplies, software or technology costs that we have. If we have an office, we'll pay for the rent. And whatever is left over, we would take it as profit for the business, whether or not you're paying yourself a salary. So that's kind of how, typical business would work. But what Profit First talks about is, they flip the model. They say, okay, you still have the same revenue that you have in your business, but before paying any expenses out of that revenue that you have, you allocate a percentage of that revenue towards profit. So it could be, 1%, 2%, 10%, whatever you feel comfortable with. Basically, talks about, okay, let's say in the same example that we talked about, you have $350,000 in revenue. Instead of paying all your operating expenses, like, employee salary, marketing expenses, technology costs, your supplies, your rent, or anything else that you have, you actually take out, let's say, 10% towards the profit allocation for the business. So now you have, out of that $350,000 revenue that you had, you take out 35,000, 10% of that 350. So now you only have $315,000 to pay for all the other expenses that you have. So that's the whole principle behind profit first, is essentially all the revenue that you make, you take out profit first, and then you go into operating expenses and other expenses that you have. So this is what, typically the financials in our business would look like. You would have revenue of, depending on how much volume you're doing, 100, 200, 300, or $1 million. And, we would pay all the operating expenses out of it. Then in some cases, we notice that investors are paying themselves a salary or not. Then, some of that would go to salary. That would be part of the your expenses, and then you pay for taxes. And if there's something left over, you would, count that as profit in your business. So that's how a standard, typical real estate investor business would be set up. Revenue, pay for expenses, pay for your salary, pay for, your income taxes to IRS and state income taxes, depending on state that you're in. Leftover is taken as profit. And your operating expenses would be marketing, employee salary, your software, your rent, and supplies. So again, in profit first, what, the idea behind profit first is, again, you set up your main bank account, or you have the main operating account that you have where all your, revenues coming in. Out of that, depending on, how much you feel comfortable with, you set aside 10 to 15% towards profit allocation in your business. So again, let's say you have $500,000 revenue coming in. This is, your wholesale fee, your fix and flip profit, whatever revenue you might have, you take 10 to 15% of that. So, $50,000 to $75,000 out of that, and you move it literally in a separate bank account to allocate that. So basically the idea is out of sight, out of mind. If the money is not available for you in your bank account, there's a lot less chance of you spending that money. And then you take, from the same revenue number, you take some money, and then you pay actually yourself a salary, whatever you feel is fair and reasonable. You want to set, if you are working as an acquisition manager in your business, you're working as a disposition manager. So the way you want to set this up is, if you were to replace yourself as an employee, and if you were to hire somebody who would come in and replace everything that you're doing, how much revenue, how much salary would you pay? So that's kind of what you want to start out with. Again, for most of the people, it's going to be a very high number, but start out with a number that where you feel like you are actually pushing yourself a little bit, squeezing a little bit of more money out of your revenue towards salary, so you have less money left over for operating expenses. The goal with this is you want to run your business super efficiently, run the same business, make the same revenue that you have in your business, but with a lot less resources going towards operating expenses. And then you want to take some of the money and put it towards, your income taxes that you have. So again, depending on what income bracket you're in or what state you're in, it could be 15 to 20%, but I just use 15% as an example. So in this case, let's say if I was setting aside, 10% towards profit, 10 towards salary, and then 15 towards taxes. So that gives me about 35% in all the revenue allocation that I have for profit, salary, and taxes. So that leaves me with 65% to pay for all the operating expenses that I have. So all the expenses that you have running in your business, your marketing, your office rent, your employee salary, everything should only come out of that 65%. And eventually the goal would be where, you keep squeezing that number from 65% to maybe down to 50 to 55%. Based on what I'm doing in my business, I'm not paying myself a salary right now, but my net profit percentage is about between 45 to 50% of the gross revenue that we have. And then, so these are the benefits that you get better cash flow management. I feel like every investor that I talk to that's wholesaling or especially people that are flipping, that's the number one challenge that they have is managing their cash flow. And then it gives you peace of mind knowing that, for example, you have money set aside for taxes. That's one good thing I did for this year is I set aside money for taxes. I literally have different bank accounts set up. And I'll go into like what bank do I use for me to like set aside different my money from my main operating account into a different bank account for different purposes. And it's helping me run a more efficient business. I look at my numbers more regularly now than I was looking at previously. Just looking at, okay, especially for us, as a listed investor, marketing tends to be the biggest expense that we have out of all the expenses. So that's one number you want to look at really, really carefully to make sure that you're not overspending, you're not being inefficient with your marketing. So you want to focus more on the marketing expenses that are giving you the highest ROI in terms of every dollar that you put in, how much money you're making back from the business. So before I go any forward, any questions on this? Brian said he can barely hear what I'm saying. Are you guys able to hear me well? I assume nobody else. I think Brian, I'm not sure. Yeah, it sounds like it sounds okay. And Dan had a question. Are you leading into the ability to do this inside of REsimpli or having to do this in Excel currently? Yes, we will have an ability for you to do this, and not right now. It's going to come out in an update in 2023. We're working on REsimpli 3.0 update. After that, we will have an ability for you to manage profit first, or cash, revenue allocation within REsimpli, and it will loosely be based on kind of what I'm going over right now. But the idea would be to help you, help make you way more efficient in your business and a few other things that we're working on. So that would be the idea with like helping you guys kind of saying, hey, this is what your revenue is in your business, and this is how much you should be allocating towards your profit, towards your salary, and then towards your taxes account. So yeah, that'll definitely be coming in REsimpli. Any other questions that any of you guys have before I go a little bit further into what I have? So those of you guys who said you're implementing in your business, I mean, how are you guys doing it right now? Anything that you guys are doing that's working really well that I could take away and start implementing in my business? For me, what I've been doing is I basically take money and I'm literally moving it to different bank accounts, like kind of following whatever the book talks about. That's kind of what I'm following. What I'm doing right now is, let me see. Yeah. So here's some of the questions that I wrote down. How much profit allocation should I start out with? Yeah. So Brian said, so on a 10,000 wholesale fee, my take home is about 1 to 1.5 percentage. So Brian, it's honestly gonna depend, what like you want to eventually try to increase that percentage to even higher. Typically, I would say, your ROI on marketing would be if you're doing over 5x. So for every dollar that you're spending in marketing, if you're making 5x on your on that marketing spend, I would keep spending more money into it. Once you start going below 4 is when I start looking at that marketing a little bit more carefully. So when you look at just based on that, that means you're 20 to 25% off your revenue. So if you're making $100,000 per year, you would need to spend about $20,000 to $25,000 just in marketing in order for you to generate that kind of business that you have. So that's what we notice. Of course, some people are going to be a little bit more efficient with their marketing, versus some people, depending on how many employees and other stuff that they have and how much money do they allocate of the employee salary towards marketing, it will look a little bit different. But so Brian, for you, I would start out with this. So if you have a $10,000 wholesale fee, I would take that, let's say $10,000. I would at least, put aside minimum $1,000, and I would push to do $1,500 out of that into a profit account, and then $1,500 of that into a salary account that you have. And then you would have another maybe, $1,500 that you might want to put towards income taxes. So you put about $4,500. So now you only have $5,500 to run your business in this case. You might not need all of that $5,500. Let's say if it's just you, and you don't have, you don't have an office expense, you don't have an employee expense, you don't have, you don't have super huge marketing expenses, then you would want to, push yourself to a higher number. So instead of doing, 10 to 15% towards profit, salary, you might want to do maybe 20% towards profit, 20% towards, your salary, and then you still have that 15% towards your taxes. So now you only have 45% remaining. So in your case now, instead of $5,500, you only have $4,500 to pay for all the operating expenses that you have. And the idea is that you stick to that 45%. You don't dip into your profit account, or you don't dip into your salary account or taxes account to pay for any operating expenses. So Brian said, is 5x marketing still relevant in today's market, or is that based on last year's and before? I'm not getting anywhere. The 5x is based on the trailing, this 12 months I'm giving you based on like the last, this year data. Of course, with the market changing, it's gonna, you're gonna see that number go down. But you want to be more efficient with your buying, in the sense, when you're making an offer on a property, you want to take off, when you want to be a little bit more conservative with your ARV, and you want to focus on the housing that's still, in the market, that you're going to still see movement in, you're not going to be sitting for a very long time on that property. With me, we're going to start doing direct mail. We're picking up direct mail again next month. We're picking up, paper lead, and we're going to start doing cold calling once we go live with Dialer and REsimpli. My expectation would be, the benchmark would be to still have 5x expectation. And then at least that's what I would start out with, and see, and then have a discussion with my team. Is it the quality of the leads that are coming in? That's the problem. Or the quality of leads are good, but it's, converting them to appointment is the problem. So I would look at every, the movement that you have in your pipeline, from the new leads coming in to how many appointments are going on, how many offers you're making. So I would look at everything in the pipeline and see if you can, before you say, 5x is not possible, I would try to be as efficient in my marketing as I possibly can. And then, look at the data based on, okay, is there anything in my marketing that I'm doing, that maybe I don't need to spend in my marketing. Quality of leads definitely has been the problem for us also in last 2-3 months. With paper lead, need to sell my house fast, we shut it down for now. So that's where I would look at. I would look at my leads. I would review my leads on a weekly basis and look at the quality of the leads, and if you have a whole bunch of leads going into dead leads, I would look at, okay, why are they going to dead leads? Are these properties listed on, MLS? Are people asking for too much? Or, if there's some other, then I would talk to other investors. Once I started noticing that in my market, I talked to other investors in my market that started noticing the same thing. And based on that, we decided to just shut it down for now, and then pick it up again next year. And Justin said, I found that an online bank that allows multiple accounts under one login has been the most helpful for the ease of implementation. All the transfers are instantaneous. Money in the income account sits there for a couple of days, then everything gets filtered down. So Justin, the bank that I use a couple of different banks. So I'm doing profit first in all my business, house flipping, and also in REsimpli. So for my house flipping business, I'm using Ally Bank. They allow, multiple online bank accounts that you can set up. So I literally have bank accounts set up for, max profit, max properties profit, max properties tax, and then and now there's a whole bunch of different banks. And then for REsimpli, I'm using a bank called Mercury Bank. They allow up to 15 free checking accounts and 1 savings account. So that's what I'm using. I take money out of my house flipping business, moving into, especially for no other reason, like profit and taxes, moving for those two, even if I don't want to pay myself a salary, but at least for profit, then I would set up a higher allocation for profit, and then also pay for taxes also. And then for REsimpli, we're using Mercury Bank. It's very geared towards startup companies, super easy to set up. I was able to set up, you can add additional bank accounts, just by going to the website, setting up. So I would look into those. Ally Bank and then Mercury Bank are the two that we're using. Cool. But as far as how much profit allocation should I start with, if you're not doing this, I would at least start out with, say at a minimum, like 5% going towards profit at a very, very minimum. And then every month I would try to, add additional percentage until you feel like, you're being super efficient. So if you start out with 5%, let's say, month of January, then I would do 6% February, 7%. And the goal would be to get to like 15 to 20%. If you can do that, that would be super, super great if you can get to that percentage. And then it's going to make you look at your business, comb through all the expenses that you have and see where you can add more efficiencies. And especially you want to start looking at on the marketing side is where you want to be really, really efficient in your business. And Justin said Relay is 20 free checking accounts, one saving. It allows me to switch between my business with one login, and each business is allowed the 20 account numbers. That's interesting. So the one that I have with Mercury Bank, it's one login, and then you get 15 checking accounts and one savings account. So it's been super easy. I mean, 15 is way more than enough than I need. Like I have two checking and one savings set up right now. In Ally, I have one savings and I think 3 checking accounts set up. So Tijel has a question. We operate in Norway, Northern Europe. Do you know if REsimpli works in Norwegian phone numbers and addresses? No, Tijel. I hope I'm saying your name correctly. Right now we only work in US. Now everything that, the phone number and then the address verification, everything is only for US, not even for Canada. We have a few people reach out to us about Canada market, but currently we're only are able to serve US businesses only. So maybe we'll look into different markets in the future. I am not sure for any other software for Europe market right now. And yeah, so as far as allocation, I would again start out, if you're not doing anything, I would minimum start out with 5% and then keep increasing that, until, with the goal of getting to 15 to 20% in profit allocation. And then I would keep the taxes at about 15%. Again, taxes number, you might want to, have a discussion with your accountant based on, if you're living in California, that's going to be a different number versus if you're living in Nevada, that doesn't have any state income tax. So you might want to, talk to your accountant, but at least I would get into the habit of at a minimum start setting aside 15% and then start paying that on a quarterly basis to the IRS. And should I set up a separate bank account? I would definitely set up separate bank accounts. What I've noticed is the idea that I like with, you could set up, like I have the main bank account that I have for my business, it's Chase. But then, on purpose, I've set up the profit first, or, the cash allocation account is an online bank account, which is a little bit, it's easier to put money into that bank account, but it's a little bit harder to get money out of the bank account. The reason why I've set it up like this is, if it's easy to money, like let's say if I have a Chase bank account, checking account, and I set up multiple savings account or checking accounts within Chase, then what happens is it's easy. You can like just by a couple of clicks, you can move money from one checking into another checking or savings account. But then just as easily, you can move money back and use for operation purposes. So the way I wanted to set it up was I wanted to make it a little bit difficult for me to move money. I wanted it to be easy to move money out of my bank account into my other, online bank accounts, but I wanted it to be, I wanted it to be a little bit difficult process to take money out of my online bank accounts and put it back into the operations bank account, in case, I needed something for operations. So with the online bank account, it takes 2-3 days before you're able to move money back into operations account. And in those cases, I would come up with some other way to, fill the cash need. And that was exactly the purpose of Profit First, is where you start looking at a business more efficiently rather than, just moving money around from one bank account to another just by a click of a button. And that's been pretty helpful for us. So I would set up a different bank account. Again, like I mentioned, I use Ally bank account for my house flipping business, and I use Mercury bank account for REsimpli. But Justin here suggested a really good bank, Relay Finance. So I would definitely check it out. They allow 20 free checking accounts and one savings account. So it looks like a really good option. I'm going to check them out myself after this. So I would look into that. And let me go back to this. The way this is how I have it set up. Let me see. Yeah, right here. So I have my main bank account. That's, we manage this with Chase. So I have my main bank account with Chase. And then for my profit, salary, and taxes, right now I'm using, for my house flipping business, I'm using Ally Bank. But I've set up separate checking accounts or separate like bank accounts for each of those. So my profit, salary, and taxes would be all separate account. And then I take money out of it every quarter, and then I move money into those, respective bank accounts to just completely take it out of it. So for me, I would say you have your main checking account, main operations account that you have, that you're sending money from, wiring money from, and then receiving your money into. And then I would set up, at a minimum, two for profit and then for taxes. But, again, if there's no additional fee for setting multiple bank accounts with a lot of these online bank accounts, then I would set up 3 bank accounts. So one would be your profit, and then that's where you want to move money first, and then taxes, and then your salary bank account, your owner's pay. Again, any recommended banks? So like I mentioned, we have main bank account is Chase, and then we use Ally as an online bank account. Super, super easy to move, to use that, set up the account. And how often should I distribute profit? I do it every month, but depending on, the volume in your business, you might want to do it more often or less often. Again, it's a very cash intensive business, but I would do it at least once every quarter. I would not do it once a year or once every 6 months. At a minimum, I would do once every quarter. But what I would do is I would still, allocate the money to different accounts or different purposes that I have. So even if you're not moving money from your main checking account into a separate bank account, but if you made $100,000, let's say this month, you would know that even though you are not moving money, you still want to know, okay, 10 to 15% of this belongs to my profit, the 10% belongs to owner's pay, and then the 15% belongs to my taxes. So you have about 25-40%. So you only have 60% left for your operating expenses. So out of that $100,000 that you receive, you only have $60,000 that you can spend. So you cannot go over $60,000 to spend towards your operating expense. So I would still, even though you're not moving money, you might not be moving money every month, but I would still keep it where internally that, okay, this is the money that's allocated for operating expenses, this is for profit, and you're not, as much as you can avoid, you're not dipping into your profit account to pay for your operating expenses. Then I would, if you have a deal closing, 1 or 2 deals closing every month, then I would do every month. But if you're closing a deal, let's say once a quarter, then I would do once a quarter. Again, but if you're just starting out, you're doing, a couple of deals a year, but I would still allocate money once a quarter to these different bank accounts that I have. And I'm also starting to use this in my personal finances. So what I do is, so if I'm taking money aside out of my, business for whether it's profit distribution or my salary distribution, before I spend any money on personal expenses, I would take a portion of that and I would put it into savings account. So I'm even trying to implement that into my personal finances. So let's say if I have, $5,000 take home, pay that I have between the profit share and the salary, out of that, let's say I might take $1,000, put it into savings. So this way I only have $4,000 to, for all the personal expenses that I have. So this way, my ultimate goal of like saving money is being met. And I'm not, spending all of that $5,000 on personal expenses and don't have any money left over. So that's all that I have. Any questions or any thoughts or feedback that you guys have? Anything that you guys are doing in your business that, I could, start implementing in my business? Justin shared a really good bank information. So I'm going to go check them out. But anything else that you guys are doing in your business? Caroline has a question: is cold calling effective as a form of marketing? Caroline, one thing I would say is every marketing works, every single marketing channel works. it just, if you do it long enough, there's no marketing channel that I can think of that doesn't work. Maybe I would say like RVM is the one that I would say, okay, if there's one that I would pick that I would not want to do this, I would say RVM. But again, having said that, I see a lot of people still being effective with RVM. Again, what I've noticed, based on the data that we look at for the really big companies that are consistently doing like 20, 30 deals a month using REsimpli, at the end of the day, every single marketing channel works if you do it long enough. And, I don't want to say cold calling works, but because if you start out with, let's say, a list of people that just bought their house in the last 6 months, and it does not matter whether you're doing cold calling to them, whether you're sending SMS to them, or whether you're sending direct mail to them. People who just bought their house, let's say in the last 6 months, in almost like you might find a rare person who wants to sell their house at a price that makes sense for you to buy. But outside of that, you want to start with the right marketing list if you're doing outbound, and then stick with the marketing channel for at least 6 months for it to make sense, where you have noticed kind of what's working, what's not working before you move on. Let me stop sharing. And Corey has a question. Do you think SMS is more effective than calling? It's kind of hard to say, like if SMS is more effective than calling. They're both effective. Again, I would say the same thing that to Caroline. It really depends. I see a lot of investors that are doing multiple deals a month using both cold calling and SMS. Yeah, it's what you feel comfortable with. What do you have the budget, and what do you have the time to do? If you're doing it yourself, but you are not comfortable cold calling people on the phone, but you're more comfortable sending them text message, then I'll start out with text message. If you feel like you don't want to cold call, you don't want to send cold text messages to people, you would rather call them. That's where you feel like you can build a rapport with people on the phone. When you have them live on the phone, then I would start with cold calling. Again, at the end of the day, cold calling, SMS, direct mail, everything would work if you stick with the marketing channel long enough. But if you're going to try it for a couple of months with cold calling or SMS, and then you feel like it's not working out, then you jump into the other marketing channel. You try it for a month or two, and then you do direct mail, and then you do PPC. Then I would say nothing is going to work. But whatever you're going to try, try based on what you feel comfortable. What do you have budget to spend for? Like for me, when I started out with cold calling. That's what I felt most comfortable with. It was outbound marketing where I was sending direct mail to people, but I wasn't cold calling them. When I started out, there was no cold texting at that point. But I just felt comfortable with direct mail. Even now, for me, if I were personally starting out, I would start out with direct mail, but that's what I feel comfortable. It has nothing to do with, based on the data, direct mail would be the most effective. No, there's some people that are really crushing it with cold calling. There's some people really doing really, really well with SMS, and a lot of people are doing really well with direct mail. I feel comfortable with with direct mail, because I can just I can put a list, send out direct mail, and then these people it's like a mix of outbound / inbound. I send these direct mail, and then, in most cases, people call back, they want to be taken off the list, but then I would still have some people that are interested in selling, calling me back. So, but that's just based on my personal experience, what I would feel comfortable with. A lot of people would say, no, cold calling or SMS would be better marketing channel based on what they have noticed versus direct mail.
Sharad,
David has a good, yeah, go ahead, Mitchell.
I'm sorry. I'll just add something to that as well. A lot of times the market will differentiate what marketing channel is going to work for you as well. There may be a lot of people in your market that are already just killing direct mail, and nobody's really doing, cold calling as effectively. So sometimes that's going to really impact the effectiveness of the channel. And in regards to the Profit First, I'm just sitting here listening to you talk about this, man. I read Profit First a while back and never really implemented it, but I love the ideas behind it. And I kind of keep my mind on that when I'm looking at my numbers. I just never set up separate bank accounts and never moved the money back and forth. As I'm sitting here and you talk about this, if you put like some KPI dashboards in RES, that would really eliminate the need for even having to put separate bank accounts and like actually have bank accounts. You could see how it's divided up right there on the dashboard. You just have one bank account technically, with a bank, but then in RES, you can see how much of that is still allocated towards operating your business. So how much you have to spend versus how much is allocated to pay your taxes and how much is coming to you as profit. If all that stuff was in RES, you wouldn't even really need to get separate bank accounts at all.
Yeah, we are going to definitely, first of all, thank you for sharing your thoughts on marketing. I definitely agree. If some markets, like one thing I would say is like, I would imagine like SMS would be the most saturated marketing channel just because it's so easy, so inexpensive to get started with. Then it would be cold calling, then it would be direct mail. One thing I will share based on, the data that we look at for, thousands of companies using REsimpli, for the most part, any company that's doing high volume of deals, one marketing channel we consistently notice in there that they're using is direct mail. Not to say most of the deals are coming from direct mail, but what we notice that they're doing some direct mail, they have some mix of direct mail in their marketing mix that they have. Not everybody might be doing cold calling, not everybody might be doing SMS, but some of the companies that are doing 8-10 more deals a month consistently have some sort of direct mail in their marketing mix. So that's what we've noticed. But yeah, coming back to profit first, Mitchell, we are going to be building that dashboard, kind of similar to what you said. But the challenge that I see with that is like, if you guys can see my screen, right, with the REsimpli dashboard. It's easy for us to set up. Like if you look at the way we have our income statement set up, it shows like 100% the revenue that we have and what percentage of my revenue is going towards general business, marketing, and payroll. So we do plan to show a dashboard also of the total revenue that you have, what percentage should be allocated towards, you'll set up the numbers, how much you want to allocate, and we'll actually show you, if you're meeting that goal or not. But one thing I would say that's in favor of setting up a different bank account, it's almost like, if I put it in the context of, let's say if you have somebody that's planning to lose weight, right? If you don't have junk food in your house, it's a lot easier to lose weight versus if you have, like cookies and, all sorts of junk food lying around your house. So that's where I like the idea of setting up different bank accounts, because I personally, I know myself, I don't have the discipline. If there's money in my account, I had a call with my accountant this morning, and I told him, hey, let's just like, even though he helped me stay disciplined in that regard, like I do a weekly call with him and he'll show, okay, how much net cash do we have available for me to draw out of the business. But we still here's like I have, this is a dummy account, but if you see, like, I literally have bank accounts set up that I call income tax, max property salary, and then I have another one called owner's pay or something that I don't have linked in my dummy account, but this is like my actual like Ally bank account where I would move money into and take money out of that. So that's where I personally see the value in, because once you move money out, and you don't have it in your main checking account, it's almost like it's a different feeling knowing that you have this limited cash that you have available for operating expenses. And also, like, it's a great feeling to see your other bank accounts that you have for profit, for taxes, and your owner space set up separately, and you see them growing every month or every quarter, however often you're putting money into it. That's where I personally see the value in setting up different bank accounts. But I know you're way more disciplined than I am, and that's where I see the value for me personally, is just setting up separate bank accounts. So yeah, we are going to be adding some dashboards after the 3.0 update. We already have all the data, where you will be able to see, we can just say, if you want to use profit first, how much of the money you've moved out of your bank account, or how much of the money should be allocated. And once you move money out, it'll kind of, help you manage that balance. So that's going to be really good. And that's going to be really good. And I believe there's a huge need for that as real estate investors, because, we might be doing closing a lot of deals, but it's amazing how, some investors that I talk to that are doing, 7-figure business every year, but how little they have left in their bank account at the end of the year because they have really high operating expenses. So that's where will come in handy. David has a account looking for a REsimpli app to manage buyers list, submit contract offers, follow up text, email, and phone track API. Do you have a demo by video? Which addresses? We do have an update coming to the app with 3.0 where you will be able to manage buyers. And then you will have, of course, the other updates that we are coming up with 3.0. You'll be able to manage if you have multiple offers, you'll have multiple offers and contingencies on a contract, not send offers, e-sign documents from within the app. I just feel like it's not a very user-friendly experience just because of the screen size. That's why we're not planning to add it, but the buyers management will be coming up with the 3.0 update, and you can already email and phone and send follow-up text messages to your leads. And with the next update, you will also be able to do that with your buyers. Corey has, I just feel a lot of people hang up and sometimes the text may be a better way to get them to know why you are calling. Corey, it really depends. I mean, with most of the marketing that you have, it's honestly a numbers game. As you go into more, for example, my marketing in Northwest Indiana is not going to be as competitive as, let's say, Phoenix, Arizona market. So if I'm talking to an investor in Phoenix, Arizona, and he says, I for example, I tell, I look at my numbers in Northwest Indiana and I say, okay, I need to make, I'm just making it up. Let's say I look at my numbers and I notice that I need to make 4,000 calls to get a deal. I cannot take the same data and go into Phoenix, Arizona market and expect the same thing because again, it's a lot more competitive market. I can use it as a benchmark to start out with, just because if I don't have any other data to start out with, I would start out with that. But then I would not get totally discouraged with that if you notice a lot of people are just hanging up. Again, there's a lot of people that are consistently doing deals using cold calling, using SMS direct mail. So I would say that every marketing works in the long term, but if you're gonna get, like, I know I would totally get discouraged if I'm doing cold calling and then 10 people, hang up on me. It's hard not to get discouraged with that. But then, if that's why I would not do cold calling. I would do direct mail because I send out this whole bunch of mail. It gets delivered. Some people will call back, and I'm not the one taking the call. Somebody on my team is, or we have call porter taking the call, and then somebody on my team is managing that after that. But I'm not the one taking the call. So for me, just based on the efforts that I have to put in, the budget that I have, and what I feel comfortable with, I would start out with direct mail. But if I would just purely looking at the ROI, I would say like SMS, assuming everything else being equal, kind of to what Mitchell said, different markets are going to give you, different markets are going to have different marketing channels that are going to perform, better compared to the market that you might be in. I would say SMS, just in terms of purely the cost per deal would be lower, but then you would have to put a lot of effort into it, because any new investor that's starting out, they're starting out with that, with limited budget. So they'll just start off with SMS marketing, cold calling, just because, it's going to cost you like a couple of $100 a month just to get started with that. So you have to keep that factor in mind. But once you've decided, I would at least stick with any marketing channel for like good 4 to 6 months before you decide to, shut that off and start into another marketing channel. Any other questions, guys? Anything on marketing or profit first, or anything you guys are doing in your business that I could implement in my business? I would love some feedback on that. All right. Any other questions I can answer for you guys? I'm just curious, this is a little bit of different meeting that we did from our regular meetings. Kind of, what did you guys think of it? Would you like to see more of, calls like these, talking about just the operation side of the business, talking about like profit first, or a little bit of the accounting side, or would you rather stick to kind of the meetings that we've had in the past? Any thoughts or feedback on this?
Sharad, this is David. I think the operation side of the business should be covered at least once a month.
Awesome. Perfect.
I think it's terrific to get other people's opinions and views. I mean, I've been separating accounts for years, but you're right. When they're all on the same screen, you have a tendency to move money if you have to. So I've never heard of profit first. I think that's an exciting thought.
Yeah, no, I mean, I'm trying to be more mindful of profit first in my business. I've accounted in my business that helps me manage. So it's a different feeling that I can just for me, like actually seeing, your bank balance go up in a profit account, or knowing that, you have money set aside for taxes that you don't have to take out of your operations in your business. It's a huge relief that I love. I was talking to my tax accountant last week, and just going through the financials, and they say, hey, this is how much you would owe, and knowing that I already have that money set aside to pay for taxes, it's a huge relief. Like it's such a big peace of mind knowing that I don't have to tinker with the operations in my business. So I personally feel like, yes, there should be focus on closing deals, but then there should be an equal focus on, okay, how do you retain as much profit in your business? At the end of the day, the goal is not to do 100 deals. The goal is to do 100 deals and make money on every single deal and be as profitable as you possibly can be. So I like that, you guys gave positive feedback. So we'll do these once a month, just to answer any questions that any of you guys have, and then I'll also share kind of what I'm doing, any challenges that I've run into in my business doing those profit first or the operation side of the business.
Sure. I just might add that I think no matter how good you think you are at talking to people in this business, if you're financially stressed, you come across actually in a panic dependent.
Right.
You must have a deal. And
Absolutely.
I've been in sales all my life, and I can tell you, if you have to have a deal, you're probably not going to get it.
Yep. Or you're not going to get it at a price that you're going to be happy with. Yeah.
Right.
And you're absolutely right, David. And other people sense that. Other people can totally sense that, when you're coming across as desperate, trying to meet your quota for for the month, for the quarter, for the year, whatever that might be. We negotiate with vendors, for our house flipping business, for REsimpli, and we can tell, if you're working with a contractor who comes across as desperate because they haven't had a job for like a month, and they really have to get this job, and then just having some finances set aside for a business, it's going to help you be way more profitable in the long term. Yeah. So I appreciate you sharing that. Awesome. Any other feedback, guys? Anything else? Any other questions that I can answer, or any feedbacks or comments that you have about this? Hey, Justin, really quick, you said the bank name is Relay Financial, relayfi.com. Is that the bank?
Yep, relayfi.com.
Awesome. Thank you, man. I'm going to share this and put this in the chat. Yeah, I mean, nowadays, honestly, I put the bank name in the chat. Yeah, nowadays, it's super easy to have these online bank accounts be set up. I mean, you can have, it's funny that, I sent an email. The only downside is like a lot of these banks, they don't have the best customer support. But then, the one that I use, Mercury Bank, I don't even think we have their phone number, but you email them and they are Monday to Friday, but they'll email you back. Like I email them over the weekend saying, hey, how many is the limit on how many savings account I can set up? They said you can only have one savings account, but you can have up to 15 free checking accounts. So that was super easy. And then they sent me, okay, just go ahead, click add new account. It was like amazingly simple to set up a new checking account. You just click add new account, you give it a name. I called it like, tax allocation, and then boom. And then you just move money to that account. So super, super simple to set up these accounts. And is there any fee for Relay Finance, or it's
nope, basic? No fees. They sound real similar, and just kind of how they're building. And Relay's definitely growing to, they're an affiliate, with an actual bank, but just creating the online accounts version of money. It's a money manager essentially. But yeah, no fees, and they're just updating to Relay 2.0. I think they switched who their affiliated bank was, and they gave them kind of more options for them. So that's when they came out with the savings account, like a savings account for them is a new thing. But you get a debit card with each of them, and I went overboard on the whole process because
Right.
I think I'm kind of like you in that, like, if I see money in one big, pot or whatever, I'm going to move it if I need it, kind of thing.
Right.
And so
Right.
being able to break it out and just see exactly like, okay, operating expenses, this is what I got.
Right.
And this
Yeah,
is
no,
what I got.
I
But
love
yeah,
that.
I've got like marketing, networking account. So like I've got a little debit card thing for just like going out, whatever.
Yeah,
Bonuses, like throw an extra percent in, bonuses for my acquisitions guys come Christmas
oh yeah, I
time
mean,
here,
it
end
helps,
of
man.
year,
It
like
just,
I've got an
it
account
makes such a
for
big difference if
as
you
much
have
as I
it set
need.
up. Yeah. And JW mentioned that, he uses the same bank and they're affiliated with Evolve Bank Interest. And it's funny that Mercury Bank is also associated with Evolve Bank Interest.
Yeah, I knew they
Interesting.
were for 1.0. I don't know if they still are with 2.0. Maybe they
Got it.
are.
Okay.
I just haven't
Okay.
seen, like when you do like a wire transfer,
Yeah,
it'll
yeah.
say
Then it shows up
Evolve
as the
Bank.
route. Yeah, the routing
And
number is for, yeah. So I added one of my other bank account, ACH, to pay out of Chase. And when you enter the routing number, it says Evolve Bank. It doesn't say Mercury Bank. So it's interesting. Yeah, that's good to know. Cool.
So yeah, same kind of platform
Yeah.
thing going on. I've called them a couple
Cool.
times and somebody always answered and
Yeah.
they were super nice.
Yeah, I mean, the same thing with Ally Bank. I don't know. I think Ally is owned by GM, I believed, or not GM, or I can't remember. But yeah, they have really good customer support. Like you call them and they'll pick up in a minute. Like they'll actually show you the wait time on their website. It's super good. But I haven't had a need to call them. I mean, just you can pretty much manage everything online, and then you don't even feel like you need to call them. It's just faster to go, on their website, say, hey, create new bank account, do this or that, and you can just pretty quickly do that.
Yep.
Awesome.
My integration or growth for it is like I use another guy for kind of like the QuickBooks side of things,
Right.
and like his chart of accounts methodology for kind of flipping and wholesaling, and how that combines with profit first and having multiple different accounts. So that's where I'm kind of like still learning the nuances of integrating both of them, but I really like both of them.
Yeah, no, I mean, I think if you like, the biggest challenge is like just to get started rather than waiting for it to be a perfect system. Even if it's like good enough and you just start moving, even if like you just start moving like a percentage, 1% of your revenue, it's just the process of getting started, and then you can just push it. Say, hey, I started with 1% of my revenue towards the profit. Now let me push it up to 2%, and let me push it up to 3% with the goal being, eventually get to 15, 20%. But if you just get started with that, even with a very small number that, you're not gonna, it's not gonna make you panic in your operation side of the business. And then you just keep bumping it up, every month or every quarter, you eventually get to a point you're like, wow, I can't believe, there were all these inefficiencies in my business that I never even needed to spend money on. And now I can run the same business and have much higher profit in my business.
Yep,
cool.
Exactly.
Awesome. Yeah, great conversation, guys. I'm very happy that you guys enjoyed this. So we'll do this once a month, and I'll see you guys next week. Thank you.